Many times when choosing a payroll service, you have to choose between a new startup with a great app or an established company whose tech may feel behind the times. With OnPay, you get the best of both worlds, a great app from an established company that's been providing payroll services for over 30 years in all 50 states. Stay tuned to hear more from our sponsor OnPay later in the episode. So LegalZoom has lots of job postings for tax associates, bookkeepers, sales tax managers. They're building out a sales team, and it's all to create, basically, in a way, it's a TurboTax or QuickBooks Live type service.
Wow, this is big news. I mean, since QuickBooks Live, we haven't seen anything on this scale in terms of a tech company or an app competing directly with accounting and bookkeeping firms.
This episode of the Cloud Accounting Podcast is sponsored by ClockShark. Now more than ever, your clients with teams in the field are looking to reduce contact and automate their manual paperwork processes. The team at ClockShark has been busy scrambling to keep up with demand by helping accountants move clients from frustrating paper timesheets to their much-loved mobile time tracking app. Even with this increased demand, ClockShark continues to provide fast and delightful support. They're actively working with accountants and bookkeepers to implement product feedback and improvements to their already robust app that includes features like crew tracking, scheduling, overtime notifications, routes, geofencing, locations, job costing, budgeting, and reporting. To try the timesheet app that's taken over the title for best customer support, head over to cloudaccountingpodcast.promo/ClockShark. That is cloudaccountingpodcast.promo/CLOCKSHARK. This episode of the Cloud Accounting Podcast is sponsored by Ceteris. When Levi Morehouse founded Ceteris, his mission was to empower small businesses in the cloud. 13 years later, Ceteris has grown from a firm with 0 clients to thousands. He's now offering an ebook featuring the 3 key lessons Ceteris learned during this journey. Lesson 1, be a small business financial consultant. Lesson 2, deliver industry-specific expertise. Go niche. Lesson 3, use the right technology. Ceteris scaled their accounting business by building automation technology and is now empowering CPA firms to utilize the same automation technology in their own firms. To learn more and to download the ebook, head over to cloudaccountingpodcast.promo/Ceteris. That is cloudaccountingpodcast.promo/CETERUS.
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
I'm David Leary.
David, I'm so excited to talk to you this week. So much news. I don't know what your top story is, but mine is PPP. Paycheck Protection Program. We're never going to get away from it. This is going to be with us for the next 20 years.
I think we're going to cure COVID before we cure and fix PPP, actually.
Oh, yeah, for sure. Well, because the forgiveness is going to go on forever, right? The ProPublica articles will follow for years. But what is happening this week, I think, is on the top of everyone's minds, and that is that coronavirus relief package that we have been waiting for and waiting for and waiting for. And Congress just hasn't been able to come to an agreement, but it's looking like they might almost be there. And what I'm focused on in this bill, this funding bill, is the changes to the Paycheck Protection Program, part of the Emergency Coronavirus Relief Act. There is a lot here. And I was really happy that Aprio, a top accounting firm, I'm on their email list. They do some great marketing. They have a crack PPP team that they have assembled that has been pushing out content around this program. And Justin Langian, CPA, who is one of the co-leaders of the team there, wrote a great article called The Top 10 PPP Changes in the Pending Bipartisan Emergency COVID Relief Act of 2020. And I liked it so much, I called up Justin and we had a great conversation. He gave me an overview of what is changing, what's going to be new in the next round of PPP, and talked a little bit about how his firm approached building a PPP practice from scratch. It was like a 20-minute interview. So I'm dropping that as a bonus episode right after this one. So if you want to learn everything about what's going on with PPP, check out that interview with Justin Alangian from Aprio right after this one.
So let's do it. We'll just drop a bonus episode with just this PPP info. So if somebody just needs specific PPP info, they can just get that episode. Or maybe it's an episode you can even kick off to your clients, those types of things.
Yeah.
Got it.
Yeah. So how about you, David? What's new with you this week?
I do have some big news. I know I've been talking about, hey, we're going to find people in our space that have never been in our space before.
You literally said that last week.
I literally said that last week. Got a little rumor mill through here. A little rumor was kicked around a little bit on Twitter that LegalZoom has been hiring accountants and bookkeepers and tax people from our listeners, accounting firms.
Recruiting them away from our listeners, like stealing them.
Yes, stealing them away.
Oh.
And so I start poking around, and then so you start doing some Google searches. You start searching for LegalZoom accounting, LegalZoom bookkeeping, LegalZoom tax. But the problem is LegalZoom historically has done a lot of like business and corporation, and they're very good with their SEO. So you have to go 3-4 pages deep on Google to actually find anything. Well, then I started finding job postings. So LegalZoom has lots of job postings for tax associates, bookkeepers, sales tax managers. They're building out a sales team, and it's all to create, basically, in a way, it's a TurboTax or QuickBooks Live type service.
Wow, this is big news. I mean, since QuickBooks Live, we haven't seen anything on this scale in terms of a tech company or an app competing directly with accounting and bookkeeping firms.
LegalZoom has always had a deep partnership with 1-800-ACCOUNTANT, which is a decent-sized firm. 1-800-ACCOUNTANT kind of always provided these tax advice. I guess you could buy like tax advice in a can. You could just go, you could you pay for a question, or you get a half-hour consult. And basically, I think 1-800-ACCOUNTANT was providing that. So then, you start looking at people's LinkedIns. LinkedIn's really cool. You can do great searches. You can search the company somebody's currently at and where they were before.
Right.
I started poking around because we already knew the current CEO of LegalZoom is Dan Wernikoff. He was formerly the VP at Intuit who ran the QuickBooks division. Rich Priest, remember Rich Priest who was on the podcast? He was running QuickBooks Live.
Yeah, and he left Intuit not long after we interviewed him at the last QuickBooks Connect that was in person, right?
That's correct.
And then we didn't know where he was going, and he ended up at
LegalZoom. A former senior engineer is now the CTO at LegalZoom. The partnerships director at Intuit who got the Credit Karma deal done, she is now at LegalZoom.
Oh,
right.
This is seeming it's happening, right? This is.
So it's funny because I didn't think, I just saw these people going there because Dan was there. And hey, they've worked with Dan before. They're taking a career change. There's going to be mid-level managers at LegalZoom of some type and VPs and run divisions at LegalZoom. I never really, as people were taking jobs there, in my brain, I never went off maybe they're going to get into the bookkeeping game and the tax game. They're not going to become a firm. So then I also noticed because of QuickBooks Live, there's people that have Intuit. There's bookkeepers out there that have Intuit as their job because they're probably like a TurboTax Live bookkeeper. And they're also have LegalZoom as their job, and they're both current. So it's kind of like, when you get in an Uber and sometimes the Uber driver is also a Lyft driver, right?
Right.
There are multiple gigs. Is that what's coming through this? And then, you dig around. I found a bookkeeper who she basically said that she's now a LegalZoom bookkeeper. And you start reading, and it actually turns out LegalZoom has purchased sometime in 2020, I don't have an exact date, they actually purchased a cloud accounting firm that does tax prep, bookkeeping, payroll. It's called Purely Solutions, purely-solutions.com. So if you open that up, Blake.
Okay, I'm going there right now. Okay, there's a pop-up here. It says, we are excited to inform you that Purely Solutions has recently been acquired by LegalZoom. Rest assured, we will continue to provide our services to you and all our clients. Wow. We're excited to have joined a company that shares our values and our commitment to your success. This union will enable us to offer the same great services you are accustomed to while adding to our expertise, offerings, and client support. So I'm clicking through, and now it says, I see their logo. It says Purely Solutions, powered by LegalZoom, tax prep, payroll, and books. We combine the best apps on the market with curious and passionate team members to deliver integrated business solutions for all your back office needs.
If you scroll down, there's a little legal disclaimer at the bottom. Do you see that?
It says, disclaimer, Purely Solutions LLC is not a CPA firm.
I saw that. And that's the same thing. As soon as you go to the terms of service for LegalZoom, the very first sentence is, I understand that LegalZoom is not a law firm. Right, so they're very clear. They are in the game, but they're trying to be very clear, hey, we're not part of the game. But the founder of the firm is a CPA, Mark Berger, CPA, and actually got his information, believe it or not. I found him on the Firm of the Future blog, which is the Intuit blog. So he's been writing blog posts for the Intuit blog in the past. I don't know if going forward that'll continue if they're going to launch a QuickBooks Live competitor.
Well, so what are they actually doing? Let's look at the career page. And this is what's so amazing about this. David, you're breaking this story, but it's really right out here in the open. You didn't actually have to like go investigation.
Oh, this has been right in front of our face. Because we've even talked about, I think we talked about when Rich Priest got hired there and when Dan Wienerkopf we've talked about this, but they never put the dots together.
But nobody has been writing about this in the press. Like if you search for LegalZoom bookkeeping, there's no news about this. Like I think this might be the very first story about LegalZoom going into this bookkeeping and tax services world. And if you go to their career page, if you go to LegalZoom.com/careers, there are jobs posted in the finance and accounting category. And there are 3 jobs that are in Austin, and the rest of the jobs are in Glendale. And the Glendale jobs appear to all be in-house finance, working for LegalZoom's accounting and finance team in-house. And that makes sense because Glendale is where their headquarters is. Now, who are these people in Austin? The jobs I'm seeing are bookkeeper, onboarding specialist, and tax associate. And then if you click into the jobs, like let's read the bookkeeper job description in Austin. It says, come join LegalZoom as a bookkeeper. LegalZoom is building the next frontier of services for our customers, business, tax advisory, and preparation. In this role, you'll work to serve our small business customers by providing bookkeeping services. This role is an exciting opportunity for bookkeepers with a passion for numbers and working with small business customers to empower them to succeed in a dynamic new part of the LegalZoom team. It's full-time. There's bullet points about what they'll do, provide bookkeeping services, assist in onboarding clients, provide ongoing app support and assistance for clients, interact with clients face-to-face via email and over the phone. Yeah, they're looking for people with bachelor's degrees in accounting and finance, with relevant experience. Experience using other apps such as Gusto, Receipt Bank, QuickBooks Online, and or Xero.
And these are all app partners of the accounting firm,
right?
Like these are apps that the accounting firm used before.
And they're listed. What was that firm's name? Pure Solutions, I think you said.
Purely Solutions.
Purely Solutions. Yeah. So they're listed as partners of these apps. There's some other jobs here. We've got an onboarding specialist job. There's also a tax associate job posted for the Austin office. That's going to be serving our small business customers by providing tailored advice on tax-related issues, help them navigate business tax planning and file business taxes on their behalf. So this is a tax and accounting firm, not a CPA firm. It's specifically called out under what you'll do. They're going to be doing forms 1040, 1041, 1065, 1120, 1120S across the United States.
One of their tax associates, Rachel Grumbles, this is just on her LinkedIn page. In her About section, she actually just lays it out. It says, as a newly formed branch of the well-established company LegalZoom, we offer bookkeeping, back office coordination, cloud-based solution software, and tax preparation. So here's the other interesting piece. You've mentioned a lot of these job postings are in Austin. They're hiring some of the ex-Scale Factor bookkeepers and tax professionals that were at Scale Factor. So you start seeing that pattern as well. So there's not just hiring Intuit employees, but they're also hiring, Scale Factor employees. And like we said at the beginning of this whole story, they're stealing employees from our listeners' accounting firms, right? So they are obviously being very aggressive about this. They maybe haven't marketed yet, and it's under the radar, but this is happening. It's happening very fast. And there's a lot of hires they've had from Intuit, product managers, right, that have taken place in the last 2-3 months.
So do we have any idea how big they are at this point? I mean, they haven't publicly announced it yet.
Purely looked like they had in their little photo of their team, they have about 20 employees. That they're in-house in their firm, and who knows what their partnership might be with 1-800-ACCOUNTANT. As I was researching this, I was really thinking, remember 3 weeks ago, when we were talking about, hey, Square bought a tax business and they got 2 million tax customers, but they only get paid $50 million for it. So we were just talking like, it's kind of a deal. Like, who else should have done this? Well, obviously now maybe LegalZoom should have just bought the whole tax business.
Yeah.
If they were building one anyway. But maybe they've already, it's that poker thing. They're just too invested in this path and it's too late for them to head down that path.
Fascinating. Well, I'm eager to see what happens now.
It's great because like a listener tipped us onto this, and Any stories we've ever broken, it's because a listener tipped us on, and then we'd start digging around. And usually the story is just public. You just had to like put the pieces together like this, a couple Google searches, and you can find it. So if you have any tips for a story, always send them to us.
Yes.
Like always send them to us.
Twitter's great for that. I'm at Blake T. Oliver. How about you, David?
I'm at David Leary.
Follow us, send us a message. Yeah, let us know what's up, and maybe we'll cover it on the show. Share it with the world. Speaking of sharing things with the world, the U.S. government unintentionally has been sharing a lot of secrets with a foreign adversary. Apparently, Russia, this has like been the top, tech story of the week. Russia was able to penetrate a bunch of government agencies through a hack of a contractor who provided like monitoring software. So basically, they hacked into this company called SolarWinds, and then they planted malware into this agent that SolarWinds then distributed across the government.
And SolarWinds, this is not like, oh, I got a $59 antivirus on my computer. Like SolarWinds specializes in super highly important
systems,
government agencies and systems, right? Like the really important stuff that we really, 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 really need secure, like nuclear weapons and things, right?
Yeah, although it wasn't the classified systems apparently, but still like lots of computers. I mean, apparently this is so widespread that they're talking about having to basically just trash the networks and start new ones because they don't know where the malware might have gotten to. And the penetration was so deep. Now, how does that relate to us in accounting and tax? Well, senators are now asking whether IRS taxpayer data was hit in the SolarWinds attack. There's a lot that we don't know because this was such a wide-ranging attack and so many agencies were hit by it. So Senate Finance Chairman Chuck Grassley and Ron Wyden, the committee's top Democrat, they have sent a letter to the IRS Commissioner Chuck Rettig, requested information about the integrity of taxpayer data and how officials are mitigating any potential damage from the hack linked to Russia. We don't know anything more than that, but they are looking into it, and we'll, of course, keep you updated on if there are any developments in that regard. Now, I've got some more IRS news. The IRS is extending acceptance of digital signatures and emailed documents. Good news. Been a nice convenience that we have been allowed since coronavirus made it really difficult to get in-person signatures. So this was allowed until the end of this year, and that date has been extended through the middle of next year. So according to a memo from the IRS, through June 30th, IRS employees can accept images of signatures, either scanned or photographed, as well as digital signatures on documents related to the determination or collection of tax liability. And it kind of makes me wonder, why don't they just make this permanent? Why are we still using wet signatures for stuff when stuff ends up getting scanned anyway? And I mean, you could fake a wet signature just as easily as you could a scanned signature these days. I just don't get it.
Well, most of the time now these days too, right? Like you sign an ink and then they want you to scan it.
Right.
Or, and a lot of times what I do is I have my laptop as a touchscreen, and I just bring open the doc and I do my signature I get my pen out, I do my little signature on that, and then send it off.
I know, but the IRS isn't even doing that, David. You can't even do that. Like in the past, you had to sign it and physically mail it to them. This is just a temporary thing that you can take a picture of it and send it to them.
Like just temporary. Like this is not an official long-term policy. It's just for COVID response.
Just because of COVID. Yeah. It's like, well, the rest of the world has kind of moved on from that. You can even do almost all of like buying a home digitally now. There's like only a few things that have to be wet signed. So it just seems insane to me. But, maybe that'll happen as we get to June. People will think, maybe we don't need to do this ridiculous thing anymore. I've got one more tax related story.
Tax related
as well. This one's actually a really fun one. Did you know that Bob Dylan sold his song catalog?
I think I saw something about that.
Yeah, for like some insane amount of money, somewhere between $300 and $400 million. It is a sale to the Universal Music Publishing Group by Bob Dylan. His whole songwriting catalog. Now, the Wall Street Journal did an interesting take on this. They wrote a story about how that sale may have been at least partially motivated by a tax benefit for songwriters that was deliberately written into the tax code. The first line in the article is probably the best. The line is, "The answer, my friend, is blown in the tax code."
Oh, Lord.
Basically, the deal with this is that for musicians, they have an advantage that they can sell self-created works and owe capital gains tax rates of 20% on the sale. So normally, a guy like Bob Dylan would owe ordinary tax rates of as much as 37% each year on the royalty income that he gets from streaming, licensing, and other uses of his works. But by selling his catalog all at once to Universal, he can only pay 20% capital gains on the sale. And he doesn't even have to pay the additional 3.8% tax that applies to most capital gains and other passive income of higher earners, because he was an active participant in the business of writing those songs over many years.
So instead of him getting a check trickling in every week, checks from Spotify, for 0.0002 cents every time he gets a play on Spotify, or if his song's using a commercial or it's on the radio, instead of that money slowly trickling in and again getting taxed at 30%, he's basically choosing, I'll take $500 million up front now and just pay 20% in taxes. And that's a tax loophole that's available to him.
Correct. And there's even ways, according to the experts cited in this article, where he can set up some sort of holding company in a different state, like not California, and he could avoid paying even state taxes on that. So it's like super advantageous to him, especially like living in California, a high tax state, to convert his ordinary gains into capital gains instead this way. Now, there's some downsides in terms of estate planning where, like he can't just pass on the song catalog to his heirs and avoid a stepped up basis. But it's like so much money that I think his heirs are going to be fine, and he gets to have it all at once right now. So, it's a trade-off, right? And also, you don't know, like maybe taxes will go up in the future, which is, looking potentially more likely now that the Democrats are in control. So sensible to do it this year.
That'd be ironic if this is all like if Bob Dylan was motivated by a tax move to sell his catalog.
Right. I know. Like it's not exactly on brand for him, right? Now, there's even a benefit to the corporation that is purchasing his catalog, because they can amortize that purchase price over 10 to 15 years. So the income stream that they now have of his catalog is offset by the amortization of that purchase. So they're offsetting their income and their expense in a way that Bob Dylan could never do. So when you like model out the future cash flows, the catalog is worth more to Universal now than it is to Bob Dylan now. So that's why they're willing to pay so much, because of all these, tax things. And then, of course, a corporation can have a holding company in Delaware own the catalog so that they don't have to have as much in state taxes and stuff like that. So, yeah, just a really interesting tax angle to this whole story about Bob Dylan and his catalog.
That's cool. I don't think that cool, but I do have another ransomware attack you can bring up.
Yeah, let's talk about fraud, ransomware, all that good stuff.
So another United States ransomware attack is at major provider for accounting and healthcare organizations. So there's a cloud hosting IT service provider called Netgain. Are you familiar with them? N-E-T-G-A-I-N.
Never heard of them.
I've never heard of them as well, but they bill themselves as, quote unquote, the industry standard for secure and scalable IT as a service for accounting and healthcare. And they suffered a ransomware attack. It looks like it went back to like November 24th, and then they had some system outages. And then on December 4th again, then December 5th again, then December 8th again, they've started to send out some notes that some servers were still down. Apparently, they're really big in the optometry and vision therapy clients. There's an app called Crystal Practice Management that they host. So just like there's the hosting companies that have a niche in the QuickBooks world, QuickBooks desktop hosting, there's obviously hosting companies that have carved out a niche in other industries. And so, but again, here it's another hosting company that's getting ransomware, and then it affects and it spreads to all their clients, which I still don't understand how this happens, because the whole point of this, of using a hosting company, is you're outsourcing your IT department.
It's all about the structure of how that hosting company is set up. If they don't have like firewalls in between all of the different servers, then one server gets infected, the other ones get infected. Like that's why shared hosting is a horrible idea, because even if you are exercising precaution on your own virtual server in that shared hosting environment, if somebody else gets infected, the whole thing can snowball. The thing is, like, this whole government hack makes me think that basically if somebody is powerful and wealthy enough, like a state, for instance, and wants to hack you, they're going to be able to hack you. There is no way that you can secure a hosting environment against somebody who's motivated enough. Like, it's just a lost cause. So you have to just hope that you're not a target. I mean, it's a great argument to switch as much as possible to using SaaS, because yes, SaaS companies can be hacked too, but it's just not the same as a environment in which you're relying on, old technology like, Windows PCs. So
yeah, and then I think you think about a SaaS company like a QuickBooks or Xero, there's kind of just like one front door that a whole team of people at QuickBooks or at Xero is trying to protect that one front door in a way, right?
Yeah.
And then you think about if you're a firm and now you have hundreds of virtual machines, thousands of virtual machines, each one of those machines is a front door.
Yep.
And that's just harder to secure. And
yep. Yeah. That's a great analogy for it, right? It's having one door or a few doors versus having hundreds of doors that you can't secure hundreds of doors.
But it is disappointing that you say like basically like you pretty much, if somebody wants to hack, you can't stop it, which is a little scary.
But let's acknowledge that reality and then just make sure that anything that you really don't want to become public, just don't put it in an email. Anything that you really want to secure, keep offline. Like if you've got cryptocurrency tokens or keys or whatever, do not have that on a network where somebody could access it. Like keep that offline on paper if you need to, in a lockbox somewhere. So we were talking about hacking. Maybe we can turn to fraud, right? Malicious actors and stuff like that. So we have some follow-up from the fraud stories that we talked about earlier this year. Luckin Coffee has settled with the Securities and Exchange Commission for a whopping $180 million. The SEC sued Luckin, saying that from April 2019 through January 2020, Luckin made up more than $300 million in fake retail sales, and that some of the company's employees tried to conceal the fraud by inflating its expenses by more than $190 million, creating a fake operations database and altering accounting and bank records. Now on to Wirecard, the other big story of the year.
So before we jump off of Luckin Coffee for a second, Eric, because I think a couple of weeks ago, they were all talking about that. There's been this push to not let these Chinese companies like this go public on our exchanges.
Yeah. So, and that there was actually news on that front. That bill passed and is over to the president for signature. We are, unless that changes, going to force Chinese companies to allow the SEC to inspect their audits. And if they don't agree to do that within like 3 years, we're going to kick them off our exchanges.
So they're going to, the SEC find them. I assume the PCAOB is going to look into them and possibly find them as well. Like every little government agency here in the U.S. is just going to get their piece of them, and then they'll let them go public on their markets. Like that's why it feels like a shakedown. Well, which is the opposite. That happens to our companies, right? When a U.S. company tries to do something in China, they have to agree to like give up IP and all this other type of stuff. It's almost like tit for tat here.
Yeah, maybe. That you think of it that way. I mean, I think of it as just holding them to the same standard that we hold U.S. companies. Mm-hmm. So let's talk about Wirecard. That's the other big story of the year. That German fintech that turned out to be faking a ton of revenue and then went bankrupt. I mean, billions of dollars.
Isn't the former CFO still on the lam? Like FBI most wanted still?
I think he went and fled to Russia, right? He's hiding out in Russia. They can't get him. Yeah. So the story here is that the audit regulator that was supposed to be auditing Wirecard wasn't doing its job. And we got a hint of that with some news that came out about Ralph Bose, the head of the accounting regulator, APAS. He testified at a parliamentary hearing that he bought Wirecard stock at the end of April and sold it on May 20th at a loss. That was during the time that APAS had upgraded its review of Ernst & Young's audits for Wirecard to a fully fledged probe. So imagine if the head of the SEC was buying stock, trading stock in a company that was under SEC investigation.
I don't know. It's 2020. Are we still shocked by any of this?
I got one last fraud story before we move on, because this is one that's been sitting here in my queue for a while.
Okay.
This is about a Microsoft engineer who's got 9 years in jail for stealing $10 million from Microsoft. And the way he did it is interesting. This guy is from Ukraine, and he was working on Microsoft's online store. And his job was to test the store and make sure it worked properly. He was doing quality assurance, David. You're very familiar with this job. So his job was to test the store by placing mock orders. And what he realized is that while the store testing environment prevented the shipment of real products, he had no problem purchasing virtual products, such as gift cards. So he would place orders for virtual gift cards as part of his testing, and then take those codes and resell those for cash. And he did that over a period of 2 years to steal millions of dollars before anyone noticed it. He would resell them for Bitcoin, and then he cashed that out using Coinbase. But those systems like Coinbase, you can trace back, and they could figure out who was doing the testing, and so they eventually caught him. Kind of a interesting.
I'm surprised that it took that long. Like where somewhere somebody's reconciliation didn't match.
Right. Well,
for 2 years.
Maybe materiality is like $10 million for Microsoft. I don't know. They make a lot of money, right?
Yeah, they have other problems.
Can you imagine like being the staff accountant who's doing that reconciliation and being like, gosh, I'm off by a few $1 million. I'll plug it this month. And then it keeps getting bigger and bigger and bigger.
Just trying to get through it.
Yeah.
This episode of the Cloud Accounting Podcast is sponsored by OnPay. OnPay is an easy-to-use, full-service payroll and HR software that is the right fit for all your clients, whether they have just 1 or 500 employees, to stay organized, save time, and get compliant. OnPay includes best-in-class integrations to benefit providers, workers' comp plans, QuickBooks, and Xero. They also handle all the complicated stuff that other payroll providers don't, like agricultural payrolls, including Form 943, multi-state payrolls, and employees with H-2A visas. With OnPay's newly released Report Designer, you can use enterprise-level data and over 50 data points to create multiple report views for all your client stakeholders, be it the C-suite, departments, or HR. Right now, Cloud Accounting Podcast listeners can get 3 free months of top-rated OnPay payroll and HR service. To learn more, head over to cloudaccountingpodcast.promo/onpay. That is cloudaccountingpodcast.promo/ONPAY. OnPay, nobody takes better care of your clients. So I know we have to do app news, but I did see an article that kind of is app news, but not app news. But we've griped about this a little bit, like Slack, right? Like we question Slack a little bit.
A little bit. I question it a lot. I freaking hate Slack. I mean, I hate email, but I also hate Slack. Like I don't like either of them. So I think that's a great transition. Let's make Slack the start of our app news segment.
Yeah. And so I want to vent on Slack before we talk about the the story. Like one thing I hate about Slack is I'm connected to work. I'm connected to Accounting Salon. I have my own Slack channel, blah, 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 blah. And then we have a Cloud Accounting Podcast Slack channel for you and I. Yeah. So I have to get in there on a Saturday morning just so you and I can get ready for the podcast. A couple messages here and there. But the problem is if I click on Slack, guess what's in my face?
All the red from work.
I have 59 messages, 8 messages, 3 messages. And it's just all the alerts are there. Like I actually was thinking about it when I opened it up today. I was like, Blake and I just need our own like communication channel that is just private for us, that there's no other, like, I don't want to see other messages, right? When I just want to send a message to Blake and it's just up in my face. So anyways, browsing around this week, I did see an article. So this is the New Yorker. Title is Slack is the right tool for the wrong way to work. And it just reminded me of you.
I'm so excited that you brought this because I really feel that way. And I'm really eager to hear like what is wrong with Slack, because I'm having trouble like vocalizing that or expressing it. Like I don't like it. It's not even necessarily better than email. Like there's many cases in which I prefer to send an email, which to me indicates there's a problem with Slack. So like what is the gist of this?
I mean, the gist of his article, and he kind of ties it back to the Industrial Revolution a little bit, right?
This is the New Yorker, so of course they're going to go back to something like that, right?
Yeah. And so he rambles and it goes on and on and on and on, but kind of the gist of it is, back in the day, like factories were trying to figure out how to make that water wheel just turn a little bit faster. So they were just making teeny little incremental improvements versus here comes a steam engine and just changed everything.
Right.
So his argument is basically Slack is just one of these teeny short-term optimizations.
An incremental improvement from email, but not actually fixing the underlying problem.
Right. And so, he goes on to say, and really this is like a typical New Yorker article. You have to read the whole thing because the only thing really good is the last sentence of the article. So I'll just read the last sentence of the article and then we can comment from there.
Okay.
The future of office work won't be found in continuing to reduce the friction involved in messaging, but instead in figuring out how to avoid the need to send so many messages in the first place.
Nailed it. Should put that right at the top, TLDR. that's what, I agree, because, what you're experiencing when you open Slack and you see 56 messages is this like complete overwhelm, like too much communication, like distill this down for me. And it's the same thing. If you only have email, it's the same situation where you open up your email inbox and you got like 200 messages and you don't know what's important and what's not.
And if you think about being in office in the person, right? So if you and I are standing there having a conversation about something, even if it's a hallway meeting, 45 other people in the company can't just also jump into just say, David. They're going to have to wait their turn.
Right.
And it's a fundamental flaw of instant. In a way, it's not just Slack. I mean, I get messages coming in on LinkedIn messages and Twitter, and you have your emails and you got your text messages. It just all keeps coming in. And maybe there is an advantage of going person to person. Like, this can't happen person to person.
Yeah.
If you get rid of all this messaging platforms. But you're right. Like, what's the need to have all these messages?
Yeah, my big problem with Slack is that it really pressures users to have synchronous communication when you don't need it. Like, you feel like you have to constantly be monitoring it or you're going to miss out on the important conversation of the day. It's almost like if it was an office, feeling like you have to walk around all the time so that you can see all the conversations going on, so you're not missing anything and you never actually get to sit down at your desk and do any work. That's what it feels like.
And it's not like Twitter where you're like, oh, I can miss some of this. It's not a big deal.
Right, because it's your work.
If I'm hearing you're saying, hey, just close Slack, open it once or twice a day when you need to check it. But then it's like, if I'm treating it like email at that point, why don't we just not use it and just everybody use email?
Yeah. Well, and then if you're only looking at Slack every now and then, it's worse because there's even more messages. And it's really hard to tell what's threaded, right? Like, at least in email, you have threads these days. Whereas with Slack, people don't know how to properly use threads. And so everything's like one big jumble in a channel. So it's even harder to figure out what's going on.
So I told Slack they need to do drag and drop. So if somebody posts like a message and it should be in the thread, you just move it and it get it in the thread, because people just, on accident, if you just type fast, next you know it's not in the thread, which is actually a fundamental flaw of Slack, because it's too easy to not post or reply in a thread. Like, it should just be smarter, or it should detect what it should be checked the context that you're typing. We have all this AI for all this stuff to service ads and all this other stupid crap. Yeah. Like, if I'd start typing a sentence, you're like, hey, are you sure? I feels like this is part of this thread, and they move it in the thread. Like, we need real AI that actually accomplishes.
That actually helps us. Yes. Helps us work better.
Anyways, that link will be in there. It's, I just saw the headline and I was like, yep, this is right up Blake's alley.
Well, let's continue on with app news. My big story this week is about Robinhood, the app that helps anybody learn how to trade stocks and even options. Massachusetts regulators have filed a complaint against Robinhood. Apparently, Massachusetts passed a rule this year that broker-dealers have to act as fiduciaries for their customers. And so the Massachusetts regulators are saying that Robinhood failed to do this. And some of the arguments are kind of funny. The complaint alleges that through the promise of free stocks push notifications and its signature digital confetti, Robinhood encourages, quote, continuous and repeated engagement with its application, unquote. State regulators allege that Robinhood allowed one customer with no investment experience to make more than 12,700 trades in just over 6 months. By encouraging inexperienced investors to continuously execute trades, Robinhood prioritized its revenue over the best interest of its customers, the complaint says. That's according to a Wall Street Journal story. So basically, Massachusetts seems to be complaining that Robinhood made investing too easy and too much fun. And there's a separate interview with William Galvin, the Secretary of the Commonwealth of Massachusetts. And he said that the platform is, quote, not presented as serious investing with substantial risk. It's presented as a sort of game that you might be able to win, unquote.
Oh, but absolutely. It has the same principles that's in Angry Birds, right? You finish the level, you get that little juice of an endorphin, then you want to do the next level. And I mean, Angry Birds is like the easy example because we were one of the first ones that really kind of developed that model. Then all games started doing it. And now not only all games started doing it, all the big media companies like Facebook and Twitter and everybody else started doing it. But now it's getting into stock apps. And what's next? Is it going to be like in QuickBooks? Like, hey, which actually maybe that would be great, right? Like, hey, you typed in your 10 bills faster than you did last time and you get a little badge or something, right? To motivate faster data entry. I don't know. But this gamification makes it very addictive because you get that little endorphin rush.
Yeah, absolutely. But and so like I'm conflicted about Robinhood because I think what they're doing is good. They're making investing accessible with making it free and making it easy to do. Like it's getting people involved in the stock market. And we want most of our citizens to be invested in the economy because that's what makes them responsible people who pay attention to what's going on in the government and all this stuff. So like I don't know. It's funny to me. It's like he sounds like a boomer, like complaining about, I used to have to call up my broker and make a trade on the phone. And, like now you can just do it with an app, that kind of that thing. And it's what's wrong with that? I mean, there's obviously a lot that's wrong with Robinhood. So it's kind of a mixed bag. Like they just paid $65 million to settle an SEC probe about how they didn't disclose their business deals with high-speed trading firms. So they weren't giving their customers, the best rates on their trades and stuff like that. But big picture, they've done a lot. They're one of the most influential fintechs in the country, possibly the world right now. There's some data here on like fintech is really, really penetrating and has grown a ton in the pandemic. McKinsey has a story out called How U.S. Customers' Attitudes to Fintech Are Shifting During the Pandemic with a bunch of survey data. Did you know that 42% of U.S. financial decision makers now have a fintech account? 6% of those were added since the start of the pandemic. Almost a quarter of financial decision makers in this country use a fintech banking platform. And investment and lending platforms like Robinhood grew by 23% and 25% respectively during the pandemic. 66% of Gen Zers have a fintech account, 56% for millennials. So over half of those generations have fintech accounts. Gen Z X is not far behind at 44%, but you guess who doesn't have fintech accounts? Boomers. Only a quarter of them have any fintech accounts on their phones.
I believe that. I don't think I could pay my parents in PayPal, Venmo. I don't think they have any of those types of apps. You probably have access to Zelle maybe through their bank, but I don't even know how to explain to them how to. I'm not even going down that path, right? I'll just be like, I'll pay you $20 cash when I see you next time.
So that's my big, tech app news story. I didn't see any big updates from the accounting or payment apps this week. How about you?
Go Cardless just raised $95 million in their Series F. So Go Cardless is based in London, and they really specialize in kind of automating recurring payments. And so they're very popular in the UK with accountants and bookkeepers because you set your accountants up on Go Cardless and you just debit every month your monthly fee, right, from your clients. Mm-hmm. And so they really were started out as being a service for that. But obviously with this next raise and the massive amount they've raised, they plan on coming to the US. They are going to e-commerce. They're heading down other paths besides just this kind of subscription B2B payment, subscription e-commerce type stuff.
Gotcha.
So they took a huge raise on that. I saw this was a little funny, I guess. Not funny, but Patriot Software, so Patriot Payroll, they now have an integration with T-Sheets. And the reason I thought this was funny because 5 years ago, maybe at a conference, I made the introduction between T-Sheets and Patriot. And at that time, T-Sheets founder Matt Rizzo was like, because Patriot also had their own timesheet app, I think, as well. Mm-hmm. And Matt Rizzo, who was at T-Sheets at the time, was like, you will never integrate with us now. There's a big press release about how Patriot Software now integrates with T-Sheets. So it's kind of I thought that was a little entertaining.
Yeah. Hey, if you are talking with David Leary and you work at an app and you're at a conference and he says, hey, you should consider doing this with your app,
it's probably going to happen eventually.
It probably will happen eventually, even if you don't do it. So you might want to follow his advice. I'm just telling you that. He kind of knows what he's talking about when it comes to the ecosystem. Well,
and then there's another raise, Ramp. So Ramp is another corporate spend card similar to the Divvies and the Brexes and Expensify. So it's another startup. I mean, I click on these. I click when I see these ads on Facebook, so I get more ads for these companies. So this is another one that's bounced around here. But they just took $30 million, which I find interesting. Our investors, because we know that Expensify, Dave Barrett, middle of COVID, sent out that email about how down travel is. Right. Mm-hmm. And how down their business was. And so are investors really assuming travel is going to come back full steam again post pandemic? And there's going to be business travel and lots of business expenses and people swiping those business credit cards everywhere.
So what app is this?
This is an app called Ramp.
And their expense management?
Yeah, but it's kind of in that newfangled, I think it might be free and it's spin up instant virtual cards. It's very similar to the Brex, Divvy, type. And now obviously Expensify is kind of into that a little bit more. It's not truly a bank, but at the same time, it's not.
Gotcha. So I have a theory about this. My theory is that the expense management apps have actually not been hurt as much as you might think by the downturn in travel and entertainment, because with everyone working at home, they're not going around and walking over to the controller or the VP of finance and saying, hey, can I have the credit card? I need to put something on the credit card. And then, being able to take it back to their desk and, put in the charge or something like that. So these cards, these virtual cards, these expense management tools are being used to help people pay for stuff when they're working remotely.
So the ability to spin up a virtual credit card for your employee, and hey, now they have a virtual credit card, they quickly use it, and then it vanishes when they're done, basically.
Yeah.
But that's a new need that has arisen because of remote.
Yeah, and it's just that the expenses have changed, right? Like expense reports still exist. Maybe you have fewer charges, but now it's stuff like my home internet, maybe, that I'm getting reimbursed for, or it's that thing that I had to buy for my home office that you're allowing me to get reimbursed for. Like we had a stat in one of our recent episodes about how the majority of employers are reimbursing for at least something in the home office. So how do you do that, right? You're doing it through an expense app, or you're doing it through one of these solutions, these virtual cards. They're probably doing actually okay.
And I'm sure that from a growth perspective, they're nothing but upside, right? If you're a new startup, right, and you happen to be a virtual solution for virtual cards, they're probably all these players are probably all growing equally right now. And so if you're brand new, your growth looks insane, right?
Yeah, and then look at what's going to happen when the economy does come back, when coronavirus goes away, and people are traveling again. Like there's just going to be even more need. So, yeah. I got one last set of stories here for apps. It's the end of 2020. Maybe you're thinking about new tech for 2021. These few weeks at the end of December are always good downtime to think about your technology and try out new things. I really love the Zapier blog. They do a great job of highlighting apps that integrate with Zapier. And it's always good to try apps that integrate with Zapier, because if it does, you know that you're going to be able to connect your data, at least in some respect, as opposed to something that doesn't integrate with anything. Zapier has some roundup articles on the best apps to consider for 2021. So they've got the 5 best note-taking apps of 2021, the 8 best free email marketing apps of 2021, and the best free CRM software of 2021. All of these links will be in the show notes, or you can just search for them on the Zapier blog.
What are the note apps that actually I find very interesting?
So the 5 note-taking apps are Evernote, no surprise there, Microsoft OneNote, also not a surprise, Apple Notes, Google Keep, and Notion, which they highlight for collaboration as the best collaboration app. So depending on the size of your firm and your needs, you're probably going to use one of those 4 up top, or you're going to look at Notion, which is better for teams. And I've actually tried Notion myself. I would highly recommend people look at that. What's great about these articles is they're all apps that have a free version, which I really like, because that way you can test it out. You can use it for a little while. There's no pressure to upgrade after, a short time period. And that's important for note-taking apps, for email marketing, for CRM software, because you really need to try that stuff for potentially a few months before you know if it's a good fit for you. So this way you can kind of try them all out, even simultaneously, and just see what feels right before you upgrade if you need more features. But they all have a version that will work for certain use cases for free forever.
That's good. I mean, I'm still on Evernote. I do the paid Evernote. I use it in a very scattered way. I tend to use generic Microsoft, the generic notepad that's just in Microsoft. Mm-hmm. And I'll open that and use that all day. But then if, you reboot your computer and you don't save the doc, it's just gone forever. So anytime I need to take a note that I'm like, I kind of want to keep this, I'll open up Evernote and do it. But I think I'm an Evernote because it was free and it was kind of first to market. Right. Yep. And then once you have X amount of data in there, I don't have to figure out how to move thousands, 10 years, a decade of notes somewhere, even though I'm sure I probably could just move tomorrow and not miss anything that's in Evernote. But
I'll tell you, David, unfortunately, as somebody who did migrate from Evernote, it's a huge pain in the butt. They don't make it easy. You can export all your notes as PDFs and stuff, but then, how do you put that into a new app? It's not easy to do. I gave up Evernote. I'm using OneNote now for all my personal stuff that I don't need to share with people. And then I use Apple Notes to share notes with my wife, because we're on, the Apple ecosystem. It's if we need to share something, we'll do it there. But if I were sharing notes with my team, then I would use a collaboration app like Notion. Google Keep, I think, is just actually a pretty terrible note-taking app, like unless all you're looking to do is share like short snippets of text or save short snippets of text that you can search, it's not good for organizing. The way OneNote and Evernote are, where you can have notebooks and you can get really detailed with your organizing, Google Keep's like, let's just dump it all somewhere and look for it later, which is kind of the Google mentality. Makes sense there.
So that's not interesting. Just the last piece of app news from Sage here. So Sage is launching their partner cloud program to accelerate cloud migration. And it's a great headline. I'm like, oh, finally, like Sage is really starting to push people to the cloud. And then essentially what this is it's going to help their partners deploy Sage 300, which is their desktop ERP, on the Microsoft Azure cloud.
Oh, I see.
But what's interesting about this, because this is their bigger, Sage 300 is their slightly bigger mid-size ERP solution, correct? And my question, I guess, here would be for Sage is like, why are you not just pushing these people towards Sage Intacct? Like it's this constant. And Intuit used to do this, I think, with QuickBooks. I think they're very clear now. It's very hard to get QuickBooks, right? Desktops are very clearly pushing QuickBooks Online. But I think with Sage, with all their business units and all their different accounting systems, I don't think they still have yet to get on the same page of like, what is the strategy at Sage?
Well, it's the same problem that, like you said, at Intuit, where you have these legacy on-prem solutions that have stuff that Intacct doesn't have and won't have for a long time.
So you think it's a feature set that's just going to keep these people, they just got to keep using the old Sage 300 because they have features that exist in there that don't exist yet in Sage Intacct?
Yeah, like the on-prem ones tend to be more robust for manufacturing, the same way that QuickBooks Desktop is. And because the online stuff developed for professional services and not for profits first. And yeah, it's the same exact problem. But then there's also just the issue of, you have these different business divisions and people have their castles, and you can't take that away from a VP or they're gonna leave, Yeah.
And I don't envy Sage at all in this, because I know it's just hard enough for Intuit, and they only have 2 products. You have QuickBooks Desktop, QuickBooks Online, but Sage has like 9 products, and they have Sage Intacct, and they have their Sage Business Cloud, which is like their entry level business cloud product, and then I don't even know, is Sage 1 around? That was the one they built on Salesforce. Is that gone already now?
Yeah, I think they gave up on that.
But they just have a lot of legacy to deal with. And it's and not only that's just US, Canada markets, right? Think about the rest of the world where they have accounting packages in other markets. I don't envy their what's on their plate for sure.
David, that's all the time we got for this week. Did we get any reviews?
We did get one review. This is from JP Lisdorf on Apple Podcasts. It's 5 stars. And it's a question is the title of his review. He said, "How did I get by before I had the Cloud Accounting Podcast? Wow, man, wow. I honestly can't believe what a cool podcast this is. You elegantly mix accounting news with what's going on in the business world right now. And for any accountant that wants to have a chance in the future, adding business acumen to the debits and credits is a necessity. The accountants that are going to survive in the future will be listening to your podcast."
That's a great review. Thank you so much. Really appreciate that. And if our listeners want to go and write a review to help us out, where can they do that, David?
If you're an Apple person, you can do it on Apple Podcasts. I think you can do it right inside the Apple Podcast app on your phone. And if you're not an Apple person, you love free market. You can use Podchaser. It's podchaser.com. Just find the Cloud Accounting Podcast. You can leave a review there, and those reviews actually show up in other apps now that are on the market.
That's great. And I cannot emphasize how important these reviews are. The quantity and recency of reviews is how many of these apps decide what to show potential listeners. So when you write a review, you are actually helping our podcast surface to other accountants and bookkeepers who will hopefully fall in love with the show as well, grow the listener base. And that allows us to do more for you guys, right? Bring you more information. Every time we get new listeners, it makes me want to read more news and find better stories for you guys.
Yeah. I saw that Christmas Day, 4x, I think it's 4x as many cell phones get activated on Christmas Day than any other day of the year. So if you're helping somebody like set up their new cell phone, feel free to just subscribe to the Cloud Accounting Podcast while you're doing that. It would be really helpful.
You can also leave us a voicemail. You can give us a call at 202-695-1040. That goes straight to voicemail. It gives you about 2 minutes to leave a message. Tell us what you think. Tell us about a story. Give us some feedback. We got some great feedback about PPP from our listeners, from Mel Comer in particular. Thank you, Mel. And we would love to hear from the rest of you on what you are thinking. What is top of mind for you? We will listen to that, and we might even play it on the air.
And don't forget about the bonus episode that's going to drop right after this.
Yeah, go listen to Justin Alangian talk about the changes in the PPP program that are coming, most likely with this new stimulus bill. David, until next time, if our listeners want to get in touch with you, where can they find you?
The easiest way is on all the socials. I'm just at David Leary. If you're using LinkedIn, be sure to say I'm not a bot, so I know you're not a spammer.
I am at Blake T. Oliver. Connect with me on Twitter or LinkedIn. David, great chatting with you as always. Until next week, stay safe and sane.
And next week will be our last of 2020.
Wow. So we're going to have to do like a wrap-up episode or a predictions episode. We got to think about this.
Yes. How are we going to handle this with the holidays? And actually, we probably need to figure out when we're going to record, because holidays on the Friday. Do we wake up the day after Christmas and record? I don't know.
I mean, we're hardcore, David. We haven't missed a single week this year. Actually, have we ever even missed a single week since we started doing this? 200 something.
At one time you wanted to like sleep in and skip, and I said, Blake, if we skip, it's over. We'll just skip every week. So we don't. We just get up and do the show.
There's an alternate universe in which we did skip, and there was no more Cloud Accounting podcast. So thank you, David, for keeping me going. Chat with you, I guess, at the end of the year.
I guess after Christmas. Enjoy your holidays. Bye.
See you then.
Time for the classifieds. I want to tell you about a new workflow solution called Bacotech. Bacotech is a cloud solution that puts CPAs in the middle of their clients' data. Bacotech gathers clients' data and delivers it to CPAs in real time through one login, enabling CPAs to make adjustments to tax returns and client accounting issues as they happen, not after year-end. Bacotech helps CPAs provide their clients with the proactive services they need and increases the firm's efficiency and leads to working less overtime in busy season. To learn more about Bacotech, head over to bacotech.com. Looking to radically increase productivity as a cloud accountant? Introducing Client Hub's Frictionless Workflow, a unique combination of internal workflow seamlessly blended with client tasks and communications. See how a frictionless experience across your team and your clients will save you hours of time. Get started today with a free trial at clienthub.app. Enter promo code CAP25 for 25% off your first 3 months. Client Hub, truly frictionless workflow. Want to get the word out about your newsletter, webinar, party, Facebook group, podcast, ebook, job posting, or that fancy Excel macro you just created? Why not let the listeners of the Cloud Accounting Podcast know by running a classified ad? Hit the show notes for the link to get more info, and be sure to check out our special stimulus pricing of 4 episodes for just $100.